Good morning to all traders and welcome to another daily market insights video provided to you, of course, by Orbex. To Stavros here, and today is Monday, July 8th, following a very interesting Friday and the monthly NFP. The numbers came out very positive, the headline numbers, but please do not forget inflation remains low. This is, in my opinion, not a game changer for the Fed. The Fed most likely is going to cut at the end of July, okay? Maybe not 50 basis points as originally anticipated by the markets. Maybe the reaction was too over-optimistic, if you asked me, on Friday. And that is the reason that I see any upside on the dollar limited, okay? That, of course, also comes with some risks to the downside, meaning that might not be the case as well. But what we can pay attention to, okay, to either validate whether the dollar is going to move higher or not is further additional economic data from the US. But as long as inflation remains low, okay, then I don't think Fed's language is going to change. Now, we have this week very interesting week, okay? The main events to look at are, I think, Wednesday and Thursday. Fed's Powell testimony, okay? This is going to give us a lot of signals as to whether the Fed is going to cut or not, and that follows the NFP. So we don't have another as important set of data to come out in the markets as the NFP until the next FOMC meeting. So Fed Chair Powell's, whatever he's going to talk about, is going to be also influenced by the latest data. So very important to look at. Now, today we have the Eurogroup meeting, but it's not really going to be something that is very critical for the markets, okay? We're not going to see much moves. We're not expecting much on the economic calendar, to be honest, but because it's Monday, what I would expect to see today is markets moving, depending on fresh sentiment. Now, I want to start with the daily index, okay? After finishing wave 5 over here a few weeks back, I now see this as an ABC correction, okay? Now, did we see an end of this correction down here and that we're moving higher, or is that not the case? Well, the truth is this. The truth is that despite the dollar moved higher on Friday, we're still within limits. We're still within limits, and that is because, okay, I was looking at this as an ABC, right? Now it's a bit mixed. Okay, the signals are a bit mixed, to be honest. Now we see this probably start moving to the downside very shortly. Okay, if that's not the case, then the correction scenario is going to be invalidated. We're going to see prices moving higher. We could even go back to 98.37. Now the case is this: I am seeing this as a move, as a impulse to the downside. Okay, that's the first one. Okay, so forget about this. So I'm looking at 1, 2, 3, 4, 5. Okay, so ABC, and then we're going for another move to the downside, another ABC, most likely to be the case. Okay, now we are still below 97.56, and this is the invalidation level for us. Okay. This is where we will get more sort of signals as to whether markets are going to go lower after this correction to the Fibonacci, the golden Fibonacci, pretty much between these first, the highest high and the lowest low of this chart. The thing is that also on the 4-hour chart, I see bearish signals popping on our charts on both RSI and MACD. Okay, and down on the 1 hour quickly, we as expected, of course, we always move within some sort of limit, so we are actually trending on the downside within a triangle, within a descending channel. The thing is, prices moved outside that level, but I do believe really that this is a false break. And if we take this as an ABC, this is exactly the 100 Fibonacci extension of this ABC correction. Okay, now from here, it looks like prices will start moving to the downside now. And then what we want to happen is we want to break below 96.45. In case price move and break above 97.56, then that would most likely be the invalidation that we will be looking for. Now down on the S&P, 4 hours, we talked about this as an impulse to the upside. This is the first wave. This is the second wave. We had an ABC over here. I thought we will have another ABC here because I see this still as a part of the correction, but I'm not sure this is the case, okay? There are, either scenarios are still possible. We're looking a little bit bearish. We might have a correction. As said previously on, I think it's been Mondays now, I've been talking about that. That looks like a very nice expanding flat, okay? And we could see prices moving lower after that. But I'm expecting a higher high to be reached anyway. I believe prices will go around the 30, 50 level to hit an all-time high. That, of course, is Fed dependent, narrative dependent, sentiment dependent. But we would want to see the dollar reversing last Friday's gains in order to have the stocks moving higher. But since I still believe that the Fed is going to remain dovish, I see another move to the upside nevertheless. Now, if we go a little bit closer, look at the 1 hour chart. An ABC up here could be the case. We've had one impulse, okay, a correction, and then we have another impulse to the upside with wave 4 having corrected down to around 29.60. Now you may ask, are we going to go lower? It's very likely, and I will tell you why. Because we've only completed wave A of this correction. We've completed wave B. That looks like to be the case at least. And now we'll probably look at moving below the 29.65 level or so for wave C, okay? We could get to 29.51. We could even get to 29.40, but anything below that would invalidate the move to the upside. There won't be a wave 5, okay? So we should be looking to get even down to 29, 29.10. But as you see, both RSI and MACD support the last wave to the upside, support such moves. So I would be cautious as to whether prices are coming back above that level, okay? So this trend line is the first one to break, and then we're looking at this high. We need to break above the 300 to validate that indeed there's going to be a new all-time high and another wave to the upside. From there, of course, is where we can start looking for further clues. But until then, all we can do is look at the charts and try to make sense, and by identifying most probable scenarios and structures. So I want to thank you for watching for another day. As always, I want to remind you to visit our blog. It's where we'll cover the latest news, provide trading ideas, and all the necessary tools a trader needs.